Hello, everyone. My name is Sabrina Pierre, and I am the owner of Convenient Tax Solutions. And I help individuals and owner operators reduce their tax liability by using tax and bookkeeping strategies. So, I wanted to do a voiceover video today regarding the most common business structures because I've been getting a lot of questions regarding which business structure may be right for my business. I've been talking to owner operators and small trucking companies who ask these questions all of the time. So I've decided to just put all of this information into one video, and I hope this helps you choose the best business structure that's right for you if you are considering a business or if you would like to change your business classification, okay? All right, so let's get into the video. So what type of business structure should I choose? So what is a business structure? So a business structure refers to the organization of a company. So the business structure you choose affects everything from day-to-day operations to taxes to how much of your personal assets are at risk. Therefore, you should choose a business structure that gives you the right balance of legal protections as well as benefits. Okay, so let's go over the most common business structures that are available. So we have sole proprietorship, we have limited liability company, which is also known as an LLC. We have partnership, we have S corporation, and as well as C corporation. Okay, so let's talk about a sole proprietorship. So a sole proprietorship is owned and operated by one person, and that person is called a sole proprietor. So if you do business activities but don't register your business as any other kind of business, you're automatically going to be considered to be a sole proprietorship. So for example, if you just started out a business and you haven't registered with the state or government, federal government, you're going to be considered a sole proprietorship. One of the benefits of being a sole proprietorship is that it gives you complete control of your business. But unfortunately, there's no personal asset and debt protection. So if your business goes into debt, your personal assets may be at risk. Okay, so sole proprietors, they file both their business expenses and personal income on their personal tax return. And this tax return is due on April 15th. However, you can file a 6-month extension to October 15th. But if you are owed any, if you owe any taxes to the IRS, you have to pay those taxes by April 15th. If you do not pay your taxes by April 15th, you will be subject to pay penalties and interest per the IRS. Okay, so it is very important to try to file your return by April 15th. And if you, like I said, if you need any more time, you can file an extension. However, tax liability is due by April 15th. So sole proprietorships are good for startup businesses, people who are just getting started. However, when your business starts to grow, you may want to look into other business structures that may give you more tax benefits. Okay, so the limited liability company, also known as an LLC. So an LLC is a state entity that gives you limited personal liability protection. Okay, so an LLC is a state level structure, meaning you're going to have to file with your state. So in order to register your business as an LLC, you would have to file your articles of organization through your Secretary of State office. And LLCs, they give you limited personal assets and liability protection. So unlike a sole proprietorship, you do have protection against your personal assets and liabilities with an LLC. Okay, so owners of LLCs are called members. So a single member LLC is considered a disregarded entity, meaning that the company itself does not pay income tax, okay? Therefore, the single member LLC is automatically taxed as a sole proprietorship unless the owner chooses to be taxed differently. So if you are the sole owner of your LLC, you're going to be automatically defaulted to be taxed as a sole proprietorship because the IRS is going to look at you as a disregarded entity. However, you can change your tax classification to a corporation if you like. Okay, you just have to fill out some paperwork and get that done. So an LLC is considered to be a pass-through entity, meaning that the business profits and losses pass through to its owners. Okay, so the owners are going to report the business profits and losses on their personal tax return. So LLCs with two or more members will be classified as a partnership for federal income tax purposes. So if your LLC has more than at least two or more members, the IRS is going to default you as a partnership, and we are going to go over partnerships in the next slide. Okay, partnership. What is a partnership? So a partnership is between two or more persons who join to carry on a trade or a business. So each person in the partnership contributes money, property, labor, or skill, and expects to share in the profits and losses of the business. Okay. So a partnership must file an annual information return to report the income, deductions, gains, and losses from its operations. So you must file a partnership return every year. However, partnerships itself, it does not pay income taxes. So the partnership does not pay any income taxes. Instead, it passes through any profits or losses to its partners. So a partnership is also considered a pass-through entity, meaning all of the profit and losses will be passed through to the partners. So each partner includes his or her share of the partnership's income or loss on his or her individual tax return. Okay, so partnership returns are due, they're due by March 15th. However, you can file an extension to September 15th. And like I've stated before, if you have a tax liability, if you have to pay taxes, those taxes are due by March 15th, even if you have filed an extension. So that is very important to pay your tax liability on time because you do not want to pay penalties and interest. All right, S corporations. Okay, so what is an S corp? An S corporation, they choose to pass corporate income, losses, deductions, and credits through to their shareholders. Okay. So S corps are considered pass-through entities as well, meaning that all business income and loss is passed through to the owners. So since it's a pass-through entity, this allows S corps to avoid being double taxed, okay, on their corporate income. So S corp owners are called shareholders. Okay. And S corps, they must form a board of directors to run the business, but the people who own it are called shareholders. So S corps are required to file estimated taxes, employment taxes, as well as excise taxes. So if the owner of an S corp works in the business, they are required to be paid a reasonable salary. Okay, so you would have to pay yourself a reasonable salary, and that salary is tax deductible. You can deduct that as a business expense. So that's why S corporations are a really good business structure to use. If you net over at least $75,000, I suggest you elect to be taxed as an S corp. Okay, so S corps cannot have more than 100 shareholders. And also, shareholders must be U.S. citizens or residents. Okay, so SCorps, their tax returns are due on March 15th, and you can file an extension to September 15th. However, like I've stated before, if you have a tax liability, it is also due on March 15th. So for S corporations, you would have to file an S corp income tax return as well as a individual tax return. C corporation. Okay, so these are C corporations are for people who businesses, multinational companies, trucking companies such as Swift or CR England, or retail companies such as Walmart, Target, Amazon. These are considered your C corporations, the big dogs who make multi-million dollars. Okay, so a C corporation is recognized as a separate tax-paying entity from its owners. So that means that a C corporation is not a pass-through entity, meaning that the shareholders are not liable for the business's debts. So the corporation itself pays corporate income taxes. So a corporation must pay a flat tax rate of 21% each year on its net income. Okay, so owners will have to pay personal income tax on dividends received. So if any owners have received any dividends, they will have to pay personal taxes on it. So this results as a double taxation. That's why C corporations are considered to be taxed twice, because they have to pay a corporate tax as well as personal taxes on dividends that are paid to them. Okay, so C Corps, they must elect a board of directors to run the corporation. They have an unlimited shareholders. You can have unlimited shareholders. You're not just required to have just at least 100 like S Corps. You can have multiple classes of stock. Shareholders can be U.S. citizens as well as non-residents, okay? So C Corps are required to file estimated taxes, employment taxes, as well as excise taxes. So C corporations, their tax returns are due by April 15th. However, you can file an extension to October 15th. And like I've stated before, throughout this video, if you have a tax liability, it is due by April 15th. So with C corporations, you would have to file 2 tax returns. You would have to file a C corporation tax return as well as your personal tax return. Okay, so if you have any questions regarding the different business structures, or if you would like a personal business tax planning regarding your business structure, where I can plug in the numbers from your business and we can compare each business entity and choose the business entity that is right for your business, that allows you to pay the least amount of taxes. If you would like that consultation, you can you can schedule a call by going to this link that you see in the slide, or you can email me at info@convenienttaxsolutions.com. Like I stated, I do help with business entity classification. So if you would like a more in-depth and personal consultation regarding your business, you can schedule a call or email me, okay? So my name is Sabrina Pierre, and I help individuals and owner-operators reduce their tax liability and increase tax savings with tax reduction strategies. So book your free call, okay? If you would like to know more information, book a call with me. All right, everyone, y'all have a wonderful day, and I'll see you in the next video.